Well, all the Fed people who've been optimistic may be a little bit disappointed by the numbers that we get today. A 0.5% increase in PPI for final demand on a month-over-month basis. It's down from 0.7 in August. However, that is almost double what was anticipated. The core rate comes in up 0.3, which is 0.1 more than it was the prior month. And the super core for PPI, ex-food, energy, and trade services is up 0.2. That's a slight improvement. For final demand on the year-over-year basis, we're up 2.2%, which is unfortunate. We were 1.6% in August, so going the wrong way and back over 2%. Ex-food and energy, 2.7%. That's up 0.5 percentage point from the August number. And the ex-food, energy, and trade number comes in 2.8%. That is down from 0.3. So where we're seeing some improvement is in the retail and wholesale sales side, the trade figures, but the rest of the PPIs rather come in a little hot.
Are you surprised that there's not that big of a reaction, or is this pretty much typical because it wasn't that big of an upside surprise and because PPI isn't as significant as CPI?
I think that last line there, Lisa, that you just said is the most important thing in terms of the market, because the PPI doesn't necessarily lead the CPI in the way people might think, and the CPI is what everybody's been focused on. The interesting thing in this number is that we saw goods prices up 0.9, while services prices were only up 0.3. That's the second month in a row we've seen a big increase in goods prices. I don't know exactly what's pushing that up, but it is the opposite of the trend we had been seeing over the past 6 months or so. I think tomorrow everybody's going to be focused on the CPI, and if we get a different kind of result there, then markets might react a little bit more strongly.
There's also a question about how much companies can pass along some of these costs to consumers, and for a while with the disinflation, that was leading to bigger margins because companies were still passing along price increases to people, and they were absorbing them. Do we have a sense of whether these price increases that we're actually seeing actually reaccelerate, that is going to lead to higher prices in the CPI, or that companies are just going to absorb it, and that means margins coming down?
Well, we don't know exactly, but you can separate out the trade services component of PPI, which is basically retail and wholesale margins. The government doesn't have a good way of measuring prices in those areas, so they look at the difference in margins for companies, and that goes into this PPI calculation. So that area did show a decline, so maybe companies aren't being able to pass on price increases quite as easily. Anecdotally, that's what you hear. That's what the Beige Book says. That's what Fed officials say CEOs are telling them. We're getting a little bit of evidence in this PPI here, but it'll be the CPI and then PCE at the end of the month that'll be determinative for the Fed.